Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to Top Stock Picks. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I am here with my top stock pick for the week. And later on, Ben Raines is going to come in and give his. But let me go right ahead with mine. And I'm looking at O'Reilly Auto Parts. That's O-R-L-Y is the ticker. Now, this is a auto parts play, obviously from the name there. It's a Zacks rank number one strong buy. Looks like a B for growth. Looks like a D for value. Almost like in my aggressive growth videos there, where I like to see that divergence of strong growth score and weak value score. But this is a top stock pick of the week. So we're not totally focused on that, but it is something that I always keep an eye on. Let's scroll down here and take a look at what's been going on with my friends at O'Reilly. And we're going to take a look at their earnings history. We see beats. These are all nice beats. And, of course, we've heard so much about the shortage of used cars. So, obviously, people are going to be spending more on used car parts or parts for their used cars. So, this is why this stock has seen estimates move up. So, you can see here, estimates moving up. That's a nice move. This is okay. That's a good move. Yep, and it's going to continue. This is going to continue. We need that chip shortage to end, and at some point, it will end. But until then, we're going to see a lot of people putting more money into their used cars. Let's take a look at the valuation here. I see 21 times forward earnings. That's pretty good. Growth is a little low there, it's just 12%. But the idea here that I want to focus on is margins. They're holding steady here, but this shortage has been around for long enough. You'd think that the company would be able to pass through some of these increases, especially with the inflation out there. So I'd like to see in the next quarter, or even definitely the next quarter, and then going beyond that, is the company increasing margins and seeing that be a driver for EPS down the road as well. Take a look at the chart. We can see it's one of these big dollar stocks, and it went up and it came down in the crash, and then whoop, just like that. That was a great line drawn there by my finger. But it just keeps on moving up, and you can see the estimates keep on moving up with it. So, the valuation, even at 21 times, a little bit rich, but nothing outrageous. And for that reason, I like this stock, and especially with the slowdown and everything else, and the chips not coming through yet as we'd expect them to. People are going to continue to get parts for their old car and keep their old car running as long as they can. All right, that's it for me. I'm going to turn this over to Ben Raines. He's got another top stock pick for this week.
Hello, everyone. Ben Raines here. Today I'm looking at Sonos, which trades on the ticker SONO. Sonos is a home audio firm that specializes in wireless and multi-room sound system. The company is often compared and competes against Bose. Sonos sells a range of sleek connected speakers, subwoofers, soundbars for TVs, and much more. It enables people to kind of build different home audio systems that they feel necessary. So its speakers are sold individually and in packages with surround sound setups that can cost up to $1,900. The speaker firm's quality and functionality help it thrive in a crowded space that includes tech titans like Apple. The company has been benefited sort of from the larger shift to modern and connected devices from older, bulkier offerings. This spring, Sonos entered also the popular portable smart speaker market with its Wi-Fi and Bluetooth-enabled Roam that costs $170. It is now its most mass appeal speaker. Last November, it also rolled out an ad-free HD streaming tier of its audio service to compete against Spotify and Apple Music. The stock is also soared from around $15 last October to over $40 in a 6-month stretch. The high-end audio firm then fell about 25% heading into its Q3 FY21 release in early August. So it reported August 11th. Sonos beat Q3 estimates and raised its outlook, with gross margins up 3% to 47% and revenue up 52%. The stock then popped following its release, and it soared after hours this past Friday and was up big again Monday morning after a U.S. trade judge ruled that Google infringed on 5 of Sonos' patents. The decision could lead to an important ban for Google. The stock has soared over 10%, as I mentioned, after hours Friday and was up 11% through morning trading on Monday to over $42 per share, which puts the stock near records. Zacks estimates now call for its 2021 revenue to surge 29% to $1.7 billion, with FY 2022 set to pop another 10%. These would come on top of 11% sales growth in FY19 and 5% last year. On the bottom line, Sonos is expected to soar from an adjusted loss of 18 cents per share last year all the way to $1.07 per share this year. Sonos and its big post-release earnings revisions activity helps it land a Zacks rank #1 strong buy at the moment, alongside A grades for both growth and momentum in our style score system. And that does it for top stock picks. So make sure to check out our Zacks.com/promo for a look in some of our services, portfolios, and more. This week you can dive into blockchain innovators.